Welcome to this edition of IG Live. It's Thursday, the 1st of June. Let's take a look at the headlines as you wait the start of today's European markets in half an hour's time. The US debt ceiling bill has passed the House. The US Senate is next. It's really all about rubber stamping, and it certainly seems there is a sigh of relief, although, to be frank with you, it's all been a bit of a charade. FTSE 100 reshuffle. British Land is out after 21 years in the top flight. The engineering company based in Birmingham, IMI, is in. And oil prices down for a fourth day. We've got a lot of excess oil in the markets, now having heard that Russia continues to pump at low prices. API stocks yesterday rising across the board. Take a look at volatility. I say a charade, maybe that's a little bit too strong. There has been fierce debates across the political spectrum in the States. But when talking about this, it happens every year. They always pass it. Something happens at the last minute to allow this bill through. It is a political fight. It is serious. But to be frank with you, it all ends in the same way, or indeed has done in the past. There will be no default. That is, of course, unless it doesn't get the rubber stamping in the next few days. But the bottom line is, as you can see here, volatility on the way down. So despite my cynicism around all this, I think the markets are taking it the way that many have been expecting it to do so, and there has been a little bit of a relief. That being said, we've got the markets on the way down. Yesterday, we had an entire 24-hour candle, or pretty much all of that, down below the 200-day moving average. Today, we're at 74.59. And if we look at what's happening on the 30-minute candle, on from the close last night, there you have it. We've got just a small handful of points in the bag. 74.40, 74.59. It's got about 15, 16 points up, 17 points up from where we were at the close last night. And that's how things are moving there on this Thursday morning. So looking for small gains across certainly the London markets when trade gets underway, despite the fact it is only a small relief on from the losses that we saw yesterday. German DAX, same sort of price action, green candle today, 24-hour markets yesterday, seeing a brief spike below this line of support at 15,660, taking us down to levels not seen since the 10th of April at one point yesterday. Then the recovery came and we're bouncing back a little bit today. Again, looking for a slightly stronger start at the beginning of the session. How long that lasts remains to be seen. We've got some economic data out across the eurozone a little bit later on today. 25th anniversary today, marking the first full days working of the European Central Bank in 1998. 25th anniversary officially today. And it's been greeted with the data out later on today on CPI. We'll cover that in just a short while, but the market's up across Europe ahead of that data. Overnight in Asia, it's been a pretty good day on the whole. You can see here, if you look at the results of the moves that we've seen in the benchmark indices in today's trade. As I'll report in just a minute, got some more details coming through in the Chinese economy, and it's a positive swing to the Caixin manufacturing PMI data, which gave a little bit of relief to the Hang Seng stock index, which yesterday went down into bear market. This is the trade that we've got here. You can see yesterday spiking at the low point. Yesterday we were down 20.98% at one point yesterday. Then came the spring back. But like the other markets, it is only a small retracement on the upside, I think, before we see further losses. Where we go from here on the Hang Seng stock index is interesting. I think if you draw a fib on here, and I'll keep this on here for future reference, is that we can work out where the levels of support are. If you look at where we are, just roughly putting that up there on the top. So the market's looking like this. We're currently trading 18,232, a little bit of relief, but this is the line of support down here at 17,717. Nice number to think of. And we'll continue to keep this on here for the early morning call. Get a candle close below there. You're then short on the way down to 16,518. With a total retracement that could ultimately take you back to October lows that we saw last year at 14,581. All this really because of China not recovering the way that many had expected. Let's take a look at what happened yesterday on Wall Street. As at the close yesterday, losses across the board. The negotiations for the deal that we're seeing hammered out for the debt ceiling went into the late hours yesterday. So that was after the close yesterday. Let's look at where we are. This is the Nasdaq. Nasdaq has been the best performer on the upside, a whopping 36% up from the lows we saw at the beginning of this year. Since then, a little bit of a move down. Yesterday, we saw the biggest negative candle in a week. Today, we got a little bit of a rise, so away from the lows that we saw as at the close last night. So at the moment, at least, we're penciling in a slightly stronger start, certainly on the NASDAQ and on the Dow Industrials. Same again, but to be honest with you, not much necessarily. We'll have to see how things develop in the next 6 hours before we get to you any firm confirmation that we are seeing a little bit of a rise at the start of today's session. So let's take a look in some more detail about this US debt ceiling. The bill passed the first final hurdle last night in the House of Representatives. A coalition of Democrats and moderate Republicans overcame an opposition by hardline Republicans that were digging in really, really hard against the liberal expansion of the budget. The House voted 314 to 117 last night to send the legislation through to the Senate. The legislation suspends, in essence, and temporarily removes the federal government's borrowing limit of $31.4 trillion through to the 1st of January 2025. It also caps some government spending over the next 2 years, speed up the permitting process for certain energy projects, and claw back unused COVID-19 funds and expand the work requirements for food aid programs to additional recipients. Now, hardline Republicans had wanted deeper spending cuts and more stringent reforms. Now the bill has passed the Senate to be signed into law. As I said, perhaps maybe in the heat of the moment, talking a little bit too flippantly about the meaning of all this. But I think broadly speaking, many had been expecting it to happen. This is the dollar basket. Yesterday, we saw an intraday spike to levels not seen since the 16th of March for the dollar. This is the dollar traded against a whole basket of mature Western economy currencies, mostly the euro-dollar trade, 50, 60, 70% of this. I'm not quite sure exactly what it is at the moment, but it is a large majority of this, which is euro-dollar trade. So we'll see in just a minute the reverse of this for the euro-dollar. Yesterday, as I say, spiking to levels not seen since the middle of March. And we're holding on pretty much the gains at the moment at 103.91. One other area of the market I want to take a look at before we take a look at any other currency crosses is what's been happening overnight in the Chinese data. Activity in the factory bases across China unexpectedly swung to growth in May, according to this Caixin survey. Now, we saw the NBS survey out recently, which showed a further negative contraction. But this Caixin survey, which covers small and medium-sized enterprises, saw a surprise. The manufacturing sector contracting faster than expected on the NBS. The official NBS PMI survey covers large state-owned companies, but this Caixin S&P Global Manufacturing Purchasing Managers Index, the privately run one, rising to 50.9 in May from 49.5 in April, above the 50-point index marking that separates growth from contraction. However, business confidence for the coming 12 months falling to a 7-month low. Now, we've already covered what's been happening with the markets on the dollar and what's been going with the Hong Kong Hang Seng stock index. But if we look at the US dollar traded against the CNH, which is the offshore yuan, you can see we're weakening further. This is the US dollar rising against the CNH yesterday, hitting levels there, again, not seen since the 30th of November. And we continue this trend here. If you are long on this, you continue to pull your stop loss up underneath you to continue to cash in all of your continue to keep all of your gains in the market. I'm looking for the price of copper. Here we go. Here's the copper trade. We are up at 81.73. Copper responding to slightly better than expected data in China, I guess in part coming away from the recent lows in the price of the base metal. So that's what's been happening there for many of the markets overnight. Let's take a look now at what we're expecting. As I said, we're expecting a slightly stronger start in the German markets. We've had retail sales out in Germany in the last half hour, rising 0.8%. Now, expectations had been for a rise, slightly stronger 1% year on year, a negative 4.3. Consensus have been for negative 5. We know that the German economy has been in recession in the last quarter of last year and the first quarter of this year. We got some CPI data out a little bit later on across the eurozone, which would be an interesting number to watch. Talking about the eurozone, the ECB, as I said, celebrating last week in its reception for its 25th anniversary. It was a week early. Technically speaking, it is today that the anniversary happens. European Central Bank was officially established with its first market operations on the 1st of June 1998. And what could be better to celebrate it than with the latest CPI data? After all, the primary objective of the European Central Bank is to keep a lid on inflation and keep price stability within the eurozone. So far as today is concerned, at 10 o'clock this morning, we get the CPI data expected to fall to 6.3%. To find lower consumer inflation, we have to go back to February 2022. Since its October 2022 peak, the CPI has almost constantly declined, but remains more than 3 times above the ECB target. Core CPI, which excludes energy, food, alcohol and tobacco prices, forecast to drop for a second straight month to 5.5% from 5.6% in April, which suggests that now that last year's higher energy prices are being phased out, EU consumers face a stickier than thought broad-based inflation. Now, this means one thing: the ECB tightening cycle is far from over. Christine Lagarde has not been acting as fast as her peers within central banks, and she's raised the main refi rate, the refinancing rate, by only 375 basis points compared to the Fed's 500 basis point move. Bank of England has been at 440 basis points in the same sort of tightening period. Now, what happened to the euro during that period? Well, IG technical analyst Axel Rudolph took a look at what's been going on with the euro dollar.
25 years of the European Central Bank. What impact did it have on the euro dollar exchange rate? Well, when you look at the quarterly chart of the euro dollar, you can see here that back in June of 1998, euro dollar was trading around the 110 area. And then it slid at the beginning of 1999 all the way back down to the October 2000 low, to levels seen around 82 cents, before then rising to the 2008 high, which was made in July of that year, around 160. And since then, interestingly enough, we've come back down again since the great financial crisis, and are currently trading back below that psychological 110 area. So from a long-term perspective, really, we're just trading around the levels where the ECB started off at, around 110, going back to June of 1998.
So happy 25th anniversary today for the European Central Bank. Let's take a look at the euro dollar. In the US, it was a shorter week, as we've heard, because the Americans out on Monday to celebrate the Memorial Day. So it means that some of this data is delayed by a day, and that goes for ADP, which was meant to have been out, or should have been out on a Wednesday, but in fact it is today where we get the ADP private payrolls number at 1:15 p.m. today, UK time. Markets expecting 170,000 job creations in the US in the private sector, fewer than the 296,000 recorded in the previous month. Meanwhile, at the same time, we get the weekly jobless claims as well, expected at 235,000. Also at 3 o'clock this afternoon, the ISM manufacturing PMI expected to fall marginally to 47 in May from 47.1 in April, which would mean a 7th straight month of contraction for the US manufacturing sector. But going back to employment data, the markets are awaiting tomorrow's non-farm payrolls. 190,000 job creations are forecast for the month of May. Unemployment rate seen rising one notch to 3.5%. Now, the quarterly reshuffle of the FTSE indices is upon us again, and indeed it was confirmed last night. There's been much speculation that logistics company Ocado would lose its spot on the benchmark blue chip 100 index, but that wasn't the case. It held on by the finest of margins. Instead, it's property developer British Land that's lost its position on the index, ending a 21-year run on the FTSE 100. Its value has been hit by rising interest rates and the disruption caused by last autumn's mini budget. The index provider, FTSE Russell, rebalances its indices 4 times a year by regulating any company that's fallen below the 110th position. The place is then taken by the best performing FTSE 250 stock. And on this occasion, the swap brings in engineering company IMI into the FTSE 100. Let's take a look at the British Land share price. And you can see on this daily chart, we've now recently hit levels there not seen since the middle of 24th of October last year. And the long-term chart, you can see here, British Land pretty much now returned to levels not seen since September 2020. IMI, on the other hand, as one might expect, continues to see lots of added value and recently has risen to levels there not seen since the 1st of February 2022. The FTSE reshuffle will take effect starting Monday, the 19th of June. So far as the stocks that were very close to being excluded, look at this. This significantly has seen Ocado recently drop down to record lows, but nonetheless near record lows. But nonetheless, it is a stock which continues to hold its position in the market. And Fraser's Group was another one led by Mike Ashley, formerly for the Sports Direct company, that also held on to its top spot. Now let's take a look at earnings out today. Just one company of note this morning. There's been Pennon, but we are not going to cover that because the utilities, the story which sets itself aside from everybody else because it's of little interest at the moment, I think, to traders this morning. But the British bootmaker, Dr. Martens, is going to be a little bit of an interest at the start of the day's trade. It's posted a drop in its annual profit. Profit before tax down 26% to 159.4 million. Now, this has been dented by supply chain issues that ramped up operational costs. That being said, for me, the headline is the fact that revenue is up 10%, and it's the first time the company has recorded a positive more than £1 billion revenue number, up 10%. The group proposes a total dividend of 5.84 pence, up 6% on this time last year. The intention is also to commence an initial share buyback program of up to £50 million. So I think, broadly speaking, this could well be a positive stock story. Recently, we've seen the stock hit lows of 127 pence. The stock will open at 155.1 pence today. It was a positive day yesterday ahead of the numbers this morning, but I'm wondering whether perhaps maybe this could actually see a little bit more of an uptick as a result of the numbers that we've seen this morning. For this company, which has a ticker symbol DOCS, and the company is Dr. Martens Footwear. Over in the US, another chip maker is due to report numbers. This is Broadcom, due to report second quarter numbers closes this evening. The street anticipates earnings of $10.12 per share on revenues of $8.7 billion. Now, after NVIDIA's earnings report last week and its market capitalization reaching $1 trillion, investors now looking at how every semiconductor maker could benefit from the AI boom. And according to some analysts, Broadcom is underestimated amongst its peers. Its networking segment is said to present significant opportunities in the AI space. Now, this stock does not trade all sessions on the IG platform, but you only got to look at one snapshot of where we've been. Like other chip makers, Broadcom stock jumping in the past few days, taking it to an all-time high. A little bit of money taken off the table in the last couple of days. It'll open today's cash session at $806.98. It reports after the bell this evening. Watching for Broadcom to see if it can emulate what's been happening with NVIDIA. Now, and amongst some of the other stocks worth watching today, I wanted just to quickly touch on Dell. I'm only doing this, it's not because it's an interesting all-session stock, more so that the fact that the company is in the wake of what we've been hearing from HP. Now, HP has not pleased investors in the last couple of days when it reported its numbers. The company is suffering from a drop in PC shipments because consumers are not updating equipment as fast as they have in the past. Now, you can see the reaction to this over the last couple of days. In fact, there's been a gap lower in Dell stock yesterday. It'll open the cash session today at 44.81. The stock also reports after the bell tonight. As I said, it's not an all-session stock, but nonetheless certainly worth watching later on today. Let's stay on the charts and just quickly mop up a couple of other areas of interest. Brent crude yesterday very close to dropping below this line of support at 70.10. A little bit of an uplift in today's session, 73.32. Yesterday, oil prices fell, pushed down by the latest API data that showed stock increases across the board. Let's take a look at the figures we saw. Crude oil inventories in the US rising 5.2 million barrels, well above expectations. Gasoline stocks and distillate inventories also rising, indicating that there continues to be a lot more oil and distillates around in the market than has been soaked up by demand there at the moment. Much of this, as we've been reporting, has been as a result of the move that we've seen by Russia to continue to pump cheap oil into the market. Finally, a chart on gold, just to tell you, it's down today at 1961, but it's after 2 days of gains. We are, broadly speaking, holding on to much of the recent gains that we've seen, apart from the fact we've seen this little bit of a pullback recently. We are up off recent lows, but a little bit of weakness in the session today. That's it. We're back at 10:30 with Charting the Markets. So watch out for Dr. Martins at the start of the day's trade. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.